Legal disclaimer: do not make this trade. Seriously, don't. This video is for educational purposes only and placed by a professional trader from Maverick Trading. Maverick Trading is sponsoring this trading experiment with a $100,000 trading account. To trade for Maverick Trading, you can submit an application for stock, option trader or currency trader from the link in the video description below.
Hello there, everybody. This is trade number 3. And at the Flat Earth Society, remember, the reason we are doing this is because so many people put so much effort into the entry. 98% of all the books and websites and videos out there are about the entry. And look, we're not saying the entry doesn't matter, but what we're saying is the exit matters more. And we're going to prove that by taking randomized trades with randomized methods and applying strict position management to it to see if we can make money at trading over time. Again, putting no emphasis on the entry, putting all the emphasis on the exit. So, what is the trade today? Well, one of the most common requests I get from the comment section, which I love the comments I'm getting, is Forex. So, let's jump into the world of Forex and specifically some Forex coins. This trade, we are going to be doing a Forex trade. I've had a lot of people jump on and say, hey, let's do Forex trade. Let's do it. So how do you choose Forex randomly? Well, I've got a couple different ideas, but the first one is I have a bunch of Forex coins. I love to travel. Travel is my hobby. I like to go anywhere and everywhere as much as I possibly can. And I always like to bring home money. I always like to bring home money from other countries. And over the years, I've been able to travel a lot, and I always keep it in this little box. So yes, I know it's giving a lot away at my house. But this is my prized possession here. $500 million to the Bank of Zimbabwe. It's not worth anything. This money went out of business. But look, I'm going to put away the bills aside because we're not going to use bills in this Forex example. We're going to be using coins. Now, I've got a ton of coins in here from all over the world, and I just was looking through them the other day, and I pulled out a couple of my favorites. I really love the Japanese coins with the holes in them. These are fantastic, some of my favorites. I also like the South African coins. South African coins, you guys got the best coins in the whole world, in my opinion. They're awesome. I love them. So I've got some from all over. Here is from Peru, I believe. Here is from Abu Dhabi, Costa Rica. And then I found some coins that are actually no longer in circulation. So we've got stuff like the Croatian kuna or koruna. Those are no longer in circulation. So if we choose something like that that's no longer in circulation, we're just going to choose another one. Now look, in a Forex trade, we usually trade two currencies. Well, not usually. You always trade two currencies in spot Forex. Here's the problem. I have so many weird currencies in here. I don't want to end up like with a Peruvian coin against the New Zealand dollar. That is a terrible currency cross. That's going to have the biggest spread you've ever seen if it's even offered. So in this example, since I've got so many weird coins, I shouldn't say weird, smaller currency coins. Like I just got back from Poland, so I got some zlotys in there. We're going to pair everything up against the US dollar because that trade is going to have at least some decent spreads and some decent volume. All right, so let's pick the currency. Let's see which one we're actually going to do. All right, here's the coin. I do not know what this one is off the bat. So I'm going to take it off the camera to see what it is. Hold on a second. I'm old. I got to get even closer to see this. All right. Look, I hate to show my ignorance, but this is a coin from the UK. This is a 2p coin. So this is what we're going to trade. We're going to be trading the pound. So we're going to be looking at pound versus dollar. That's going to be our first currency trade of the Flat Earth Trading Society. So after picking the coin out of the box, the pence, we now have where we start. It is August 7th, 2023. We are going to be trading pound dollar. Now, the next thing we need to see is what is the current trend. Remember, we're going to always trade with a trend. So what is the slope of the 13 EMA on a daily chart? Let's check that out. Here we have pound dollar on a daily chart. So here we are. Let's just take a look at the moving average. The 13 EMA is sloping downwards, but it's flattening out. And I'm looking at this saying, okay, remember we said if it was flat, we wouldn't take it. We would choose another one. And I got to say, this isn't flat yet. It's not flat yet. So because it's not flat yet, we have to take the trade. That's the whole point of the experiment. We're going to take the trade. I personally hate this trade. I would never go short pound dollar here on a daily. Look, after it's had a little run here and turned over, sure. But that's not what this experiment is about. This experiment is about taking whatever trades you were given at whatever time you're given them and making them. So current market price is right around 127. I'm going to say 70. We're just going to start there, 127.70 with our math, and then we will adjust it for when we actually get into the trade. So the trade will be short. Looking at the slope of the 13 EMA, we are going to be short, and right now the entry price looks to be around somewhere around 1.2770. Now we can't figure out our size yet until we figure out our initial stop, and we got to go to ATR for that. Here we are back to the chart, and we just need to come down here to ATR, and we can see the ATR is currently 0.0102, so that's 102 pips is going to be our 1 ATR on this. So 1 ATR is 0.0102, so 2 ATRs is going to be 0.0204. At this point, we can now go into a position sizing calculator and get our correct position size on the trade, and we're going to be using a Forex position sizing calculator to get our current size. But first off, we need to take our current balance of our trading account. Let's check in on that. Our account is currently at $102,699. So that is going to be the number we use to take our position size. You can see we've got one position open that is up about $550, but we don't care. We're going to let that do its own thing. We have just to follow our rules, and that's it. So let's go to get position size. Here we are at babypips.com. This is a very nice little website. So let's put in our account balance, $102,699. Our risk percentage, 1. Our stop loss is going to be 204 pips, and the currency pair is going to be pound dollar. So we put everything in, and we just hit calculate, and it tells us this is what we want to do. We're going to do an order of 50,342. So 50,342 is our position size. If you're not familiar with Forex position sizing, this is just the total dollar amount. The total dollar amount outlaid on this trade is 50,342. So let's go ahead and throw that in. Let me bring up pound dollar here. And what we're going to do is we're simply going to come over here. We're going to put in an order. You can just do it at the market. Remember, we're just doing it when it's delivered to us. 50,342 is going to be the position size. So let's go ahead and enter this. Hit submit. And there we go. We have been filled, and it's been somewhere around, we'll get the fill price. Fill price was 127.70, so right on our analysis. So the next thing we need to do, all right. Now, after 25 years, you'd think you wouldn't make these mistakes, but I made a mistake. I went long, and we were supposed to go short. So I'm going to exit this trade, and we will flip back to the short side. And yeah, every time you make a little mistake like this, sometimes it costs you a little, sometimes it doesn't, but it always costs you a commission or a spread. So there's always a little bit of a transaction whenever you screw it up. So I'm going to reverse this. I'm going to get out of it. And look, for the ease of this, and I don't want to make this too complex, but here's what I'm going to do. If I sell short double of my amount, so my amount is 50,342. If I sell short 100,684, then that's going to take me to the right place. So hopefully that made sense to you. 100,684 is the position size. And this is going to take us from long to short. So 100,684. Okay. Look, it happens to us all. Here we go. So we're now short the proper amount. We're short the proper amount. That will be adjusted. And now we have to put in our stop. So we're just going to put in our buy stop. And we're going to be using a trailing stop. And it's really easy because I just put in the amount, which we decided was 0.0204. 0.0204 was a trailing stop. We'll make this good till canceled. And, come on. There we go. All right, so that is our trade. We have our trade in there, and it's either going to work or it's not. As I said, I would never have actually made this trade. I'm looking at this chart thinking this is a ABC correction pattern from a 5-wave LA wave. I'm not a huge LA wave, guys, but I love to think in terms of movement. We just had a big wave. We pull back right to the 50% line Fibonacci. I mean, I would never short this here. But I'm telling you what, this trade easily might be a winner. It might be one of our biggest winners we've ever had. You just don't know. That's the point of this whole experiment, is that you don't know. You think you do. You do all your studies, you do all your readings. When it comes right down to it, you have no idea once you click that button and in it. That's why we're doing this experiment, is to show you that you truly have no idea, and you better get out of your bad ones, and you better hold your good ones. This entry is in the books. So we did our first one. We put our initial trailing stop at 2 ATR above. Once we get to 2 ATR profit, if we get there, we're going to go to 1.5. If it never gets there and it reverses, it's going to stop us out for whatever the loss is. And once we get to 4 ATR, we're going to move it to a 1 ATR trailing stop. And that's it. We sit back and we are spectators at this point. We don't do anything. Look, you can see, think, and feel whatever you want, but do not touch anything. The system is there. Make sure you follow the system. All right, that is trade number 3 in the books. Goodbye, everybody.